Welcome back to Mr. Key's Money Monday. It is Monday, actually, July 27th, 2026. This is our beginning account where we go from zero. We're trying to get up to $100,000 in a year. So you can see the goal there. Remember, this is a journey of my account, and I share it with you for informational purposes only, not providing any financial services or recommendations for you to do any of these options or invest in these stocks. Please do your own research and understand the risk involved. If you'd like to follow along with this account and see how I do, please like and subscribe to the channel. And with that said, let's get into it. So our current positions in my Robinhood account that I have right now, we have a put that expires this Friday, a 750 put. That one's actually in the money. I think IBRX is right about $7. So you can see, yep, $6.97. We got paid $30 for this option. Go down here. We got paid $30 for it. If we would not want to buy the stock, or we just think it's going to keep tanking, we could close this out. It would cost us $58. We got 30, so it would be an expense of $28. Otherwise, if you want to get assigned this, like I'm going to do, I'm just going to keep this there. If it stays below 750 on Friday, then I'll get assigned 100 shares, and then we'll turn right around and sell a covered call. This is the Wealth Wheel candidate we've been following. We've bought this and sold this once already, and we've sold puts and calls on this. So, looking good there. That one's fine. I'm fine with getting assigned that, so I'm fine there. All these others are not in the money. They're far out. I think this is at $26. The Carnival HB is up to like 42 now, is fine, and silver's still the 50. So those are all fine. These were stocks we would be interested in buying if they drop below. We're doing a spread just to protect ourselves so we don't have to have as much money in the account to be able to make these positions work. So to find something, again, I want to buy, I went to my stock screener, went to FinViz, free site you can go to. Here's all the parameters I put in there. I want a market cap. I want middle and up. I want a price over $10. I want a dividend yield that's positive. I want them to pay a dividend. That's a stock I want to own. Average volume over 2 million shares shared, transacted, so we know this is a liquid stock. Optionable and shortable. No point in doing this if there's no options on the stock. Fundamental. I went in, and these are my criteria. I'm looking for a good stock that I want to invest in. P ratio under 25. I want positive growth in their earnings per share to go be this year positive. I want it next year to be positive that they're projecting. I want the forward PE to be under 25. That didn't change anything. If I put this to any, you can see I still get the same 11 stocks. PEG ratio under 1. EV over EBITDA under 10. Price to sales under 4. Return on equity over 10%. Debt to equity under 1, and price to book under 4. I didn't do any technical analysis just because that just got it down to the 11 right there. I could have probably done a little bit more if you're trying to look for something on sale or whatever. But that's the criteria I used for a stock I'm interested in buying, and then I will place a option on it and see if I can pick it up a little bit lower. So I came out with these 11 stocks. Barrick Gold I have in my other account. I've traded that one. I've traded Devon Energy. I've traded Newmont, and those are another gold. Kinross Gold Corp in Canada. Never heard of that one. So look at that one a little bit. And so the trades I was looking at were either Newmont or Synchrony, but their prices are a little bit higher than I have in this account right now. So I was looking for something a little bit lower. So I decided to look at this Kinross. Clicked on this one. Close the ads. Looking down here, you can see all their fundamentals down here. You can see the earnings going up. Basically, this kind of follows the gold price. I'll show you a chart of that in just a second. You can see their sales been going up. Obviously, if you're selling gold and the price of gold is higher, you're going to make more money. And you can see they've been buying back some shares, taking some shares out of circulation. So I like that. All things I like in a company and a stock. Does pay dividend. It's a small one. It's like 5 cents each quarter. Maybe it's 4 cents, something like that. 4 cents a quarter. So it's a small one. But maybe as the price goes up and they make more money, maybe they'll return a little bit more. Their payout ratio is only 6-7%, so they can afford to pay out a little bit more. So hopefully that'll grow the dividend. So those are things I'm looking for. So I like this. Looking at this chart here, to invest in this company, you would have to believe in the price of gold is going to stay high and go higher and not collapse back down to where it was before. So I clicked on the weekly chart of this stock, and you can see how it went up. It's come back down. If I click on the price of gold, this is about 5 years in this chart. Click on the price of gold here, and I do a 5-year chart here. You can see basically the same as that stock. So that stock kind of follows what gold does. So what is your belief in gold? Is it going to collapse back down? Is it going to stay here? Is it going to go higher? I say over time it's going to go higher. So this is something I'd be interested in investing in. If you believe differently, then don't do it. All right. So with that said, went into here. The one concern we have about this stock, when I typed in KGC, and the one thing about doing this trade is that earnings are coming up the 29th. So just coming up in a couple days, which is good for selling options because probably the price is a little elevated because volatility is a little higher. So watch out for that. That's the one thing. If they have a bad earnings report, I guess the stock could come down, which I guess if we're trying to buy it is not a bad thing. So looking at this, the 1-year chart, kind of come back down. If we can get it back here, in 21 price range, I wouldn't mind that. So I go over here, say trade options. I'm going to sell a put, and I went back and forth on whether to go just 25 days out or go to the 18th and get 53 days out. Let's compare the two. We'll start with the 18th. I was thinking 21. We look at our delta. This is the probability of it getting down there. So if you really wanted to buy the stock, you could go right at the money, and you could just sell a put of $23 and get $1.43 for it. 21, the delta is at 22, so kind of a 22% chance it could get down there. I usually trade in the 15 range, so that would be here. So one of these two I was looking at, and if we went 21.19, that would get us about 36 cents. 67 minus 31, that is 36. If you want to be a little more conservative, you could go 20. And the reason I'm doing a 2-point spread is because you can see there's not a lot of contracts down here. Open interest, there's not a lot of contracts down here. It'd be hard to get filled here. So I'm going here, and if they have a bad earnings report and the stock really tanks down to 18, 17, we have a smaller loss here, smaller expense. So you could go, 2018 would be a little tough, but you get 23 cents there. So if I were to do this one, probably the 21.19, I'd get 36 cents. But if I just want to go a month out and go to the 21st, August 21st, which is where our other options are, and look at this one, still selling a put. 21 gets me in that 15 delta range. I can get 28 cents there. Ooh, that's kind of dropped down since I looked at it. And 19, so that's only 14 cents. That's not what I was looking at a little bit earlier. Erg. When I was looking at this earlier, this was a little bit higher. Let's see if I can look at it. It's between 17 and 39. So splitting that gets you 28. I was looking at 30 some there. So let's see what happens. If I click sell that one and I were to buy down to the 19. That would only get me 14 cents. Erg. I really wanted like 20, at least 20 for that. That'd be 10% on my money. 5% would be $10, so that's not bad. We don't pay commissions in this account on Robinhood, so it'd be okay. So let's see if I hit continue. I'm going to put it in for 0.20. And I'm going to hit good till cancel. So I'll put that in there. If we get filled, great. If we don't, not going to hurt my feelings. I might probably go in and maybe sell the September one. Review the order. And I'm going to submit that. And we'll see what happens. Oh, I got filled. There you go. I got filled, got the $20. Hey, it pays to ask for a little bit more. So maybe could have got a little bit more. Maybe I should have asked for 25. Oh well, play with it in your own account. See what you can get filled at. I'm going to take the $20 and be done for the day. All right, there you have it. Now let's go put it in my trading log here. Here's a trading log that I have. You can have your own trading log, whatever you got. When I first started, I had just a piece of paper and I wrote it all down. But it's hard to show that on the computer here. All right, so I'm going to put in here the symbol KGC. I got a credit. We got paid for this. We did a put credit spread, and we believe the stock is going to hold the same or go up, so we have a bull put spread. Sorry. So usually I don't say bull put spread. I just say a put credit spread. That means I got paid to put a put spread on. Entry date 7/20. What is today? What was it? 27. All right, 7/27. Oops. 7/26. Entry price. What did we get paid for that? We got paid 0.20. Expiration. We did the 8/21/26. How many contracts did we do? We did one contract, and we haven't exited yet. Usually what I do, if this expires worthless, I'll just leave it there, leave it blank. You can put in the date, you can put in what the exit price is, you can see if it expires worthless, it expired for 0, and how many contracts you had, and that would calculate my P&L. So there we go, and over here I usually like to put what I did. Price-wise, I did a 21/19 for the strike price, and the IBRX I did a 750 strike price. That's just a way we can kind of follow along and see how it works. All right, so there's how we did the trade. We looked for a trade, we placed a trade, we got filled on a trade, we journaled our trade. So that's how you start out. So if you're just starting out, that's what you do. Have a good day. Bye.